Hey, good morning, everyone. Welcome to Market Insider TV. It is our opening commentary. It is Monday, June the 25th. Excuse me. Thanks for joining us here. We've got so many things going on today and this week. We'll be doing the Minneapolis Grain Exchange marketing commentary this entire week. Plus, you have the quarterly stocks acreage report coming out on Friday, 11 a.m. Central Time. First notice day for July grain futures coming up on the 29th. That's along with all positions reported after the close on the 28th. We have a reaction to the markets today for the quarterly for the monthly cold storage report and the monthly cattle on feed reports. So our newsletter is just jam-packed full of info. Our weekly insider newsletter went out, and it's got all kinds of stories and features. And then this week's and daily newsletter will follow up all those feature stories. Plus, we have estimates for the quarterly stocks, planted acreage numbers, our crop progress estimates, all kinds of things, as I said, for the week ahead, as it's going to be a very busy week, and it has been over the weekend as well. So hope you check out our newsletter. The exporters announced private sale this morning, 186,000 beans to an unknown destination. We did see a sale of corn on Friday, and now we're seeing a sale of soybeans to follow up with it. So good to see that we are getting a little bit of export business after such a sharp drop in prices. As we've been saying, this is a major concern that we've not seen much in the way of export business despite nearly a $2 drop in soybean values. Trade this afternoon will be looking for steady corn ratings. Last week we were 78 good to excellent. Soybean ratings should also be close to steady at 73 good to excellent. Hard red spring, you might see an uptick in ratings. Last week they jumped 8 points to 78, so trade right now looking for 1% improvement, maybe to 79 good to excellent. And winter wheat harvest advancing to 36% complete, a little bit behind the average of 42%, but there was some rains that slowed things down across the plains over the last week. Cattle and feed report came out on Friday, and on feed numbers a little bit negative compared to the estimates, 104%. That's a little bit larger than the average trade gas. Placements are where the big bearish news lies here. Placed at 100% versus estimates of 95.6%. That is the largest since 1996 as far as placement numbers, and well above the trade estimates. That should weigh on futures here this morning, along with cash trade that developed at 109, 110 area, and maybe even some as late as 107 very late on Friday. Marketing's at 105, right in line with the trade guesses. Cash cattle trade overall 109 to 110, down $2 to $3 from last week. And cash trade in the north was noted with moderate volumes at 109 to 110 and 172 to 173. So certainly down for the week. This week is expected to be even lower as packers buy for a holiday shortened kill week next week with the 4th of July holiday. So look for cash cattle to come under pressure here this week, especially if the futures drop early part of the week in reaction to this on-feed report and the cash cattle trade. So negative news for the cattle market to contend with. Grains here are going to struggle with any rally attempts as crop ratings should remain relatively high. Crop looks very good, and there is talk from President Trump that there'll be more sanctions against China on Saturday if demands are not met as far as tariffs goes, and no doubt that China would retaliate again. So trade uncertainty, good growing conditions looks to keep lids on rally attempts here in the cattle, or excuse me, in the grain market. So have any questions, contact any of our offices. I know they'd be glad to talk with you. This has been Brian Hoops. Have a great day, good luck, and good